Welcome back to the Global Digital Asset Regulatory Summit. I'm your host, Alec O'Sullivan from the Digital Economy Council of Australia. Our journey now takes us to Japan, one of the earliest countries to embrace digital asset regulation. Japan has long been recognized for creating some of the most comprehensive frameworks in the world, balancing innovation with strong consumer protections. Moderated by Jack Deeb, this fireside chat brings together Fumiaki Sano from the Japan Crypto Asset Business Association and Masashi Yanase from the Financial Services Agency. Together, they will provide insight into Japan's regulatory approach, the lessons learned from being early movers, and how their market continues to evolve. All right, welcome everyone. Jack, over to you.
Thanks very much, Alec. Hello, everyone. My name is Jack. I'm one of the co-founders of Pier Two, and I'm also on the board as a non-executive director of DECA. And I'm very excited to be hosting a panel this morning to talk about digital asset regulation in Japan, what's happening now and what will be happening in the future. And thankfully, I am joined by two people who know a lot more than myself about that topic. And that's Fumiaki Sano from the Kataoka and Kobayashi LPC law firm, and also Masashi Yanase from the JFSA, the regulator, financial services regulator in Japan. So before we jump into this panel, I would love to hand over to each of the panelists to give themselves an opportunity to introduce themselves in a little bit more detail, starting with you, Fumiaki. Thank you.
Okay, thank you very much for the kind introduction, Jackson. My name is Fumiaki Sano, and I'm a lawyer in Japan. I had the opportunity to work at JFSA for 3 years, starting in 2017, and I currently to serve as a legal advisor to the Japan Crypto Asset Business Association, so JCBA. Today, I provide legal advice to financial institutions and other businesses on their assets, including crypto and stablecoin and so on. I've been looking forward to joining this session, and I'm very pleased to be here. Thank you for having me.
Thank you for joining, and over to you, Masashi.
Hi, good morning, and good afternoon. My name is Masashi Yanase from Japan Financial Service Agency. I'm also a lawyer, but I joined Japan Financial Service Agency, and so Japan Financial Service Agency is a authority that regulates financial institutions, and I'm in Department of Monitoring Crypto Assets and Stablecoins. So thank you for having me today, and yes, thank you for having me today.
Thank you. And so to start off this discussion, we want to think about where Japan stands today. So the legal and regulatory frameworks for digital assets have in Japan been in place for several years, and like many other jurisdictions in the region, they continue to evolve. So starting with you, Masashi, would you be able to give us an overview of the JFSA's key regulatory milestones for digital assets, particularly those relating to virtual currency exchange service providers?
Okay, thanks. So before I talk about the milestones, let me just briefly explain about the classification of tokens in Japanese regulation. So there are three types of tokens in Japan, and which are security tokens, which is token that provides a dividend, and electronic payment instrument, which is a fiat-backed stablecoin, and a crypto asset, which is tokens that are not security tokens or electronic payment instrument. So crypto asset and stablecoins are regulated as a payment instrument, and security token is regarded as a financial instrument. And so for the milestone, Japan established an early and comprehensive framework for crypto asset services. Due to the cyber attack on Mt. Gox, we have keenly aware of the need to regulate crypto asset exchange service providers. So in 2017, we introduced the registration regime for crypto asset exchange service providers under the Payment Service Act. In 2019, ICOs were frequently used, and there were many cases of fraud in the name of ICOs. Therefore, in order to regulate the issuance of tokens that distribute profits, the law was amended so that it could be regulated as security tokens under the Financial Instrument and Exchange Act. In 2023, we implemented a legal framework for stablecoins, treating them as electronic payment instruments under Payment Services Act. With this amendment, it has become possible to register as an electronic payment instrument service provider, enabling the handling of so-called stablecoins pegged to fiat currency. In addition, the issuance of electronic payment instrument can now be carried out by existing banks, trust companies, and fund transfer service providers. Furthermore, in 2025, a new intermediary business category was established for entities that exclusively engage in the intermediation of crypto assets and electronic payment instruments. As mentioned earlier, both crypto asset and stablecoins have been positioned as mean of payment under the Payment Services Act. However, given that the crypto assets are increasingly viewed as investment assets rather than payment instruments, we are considering regulating them as a new asset class under the Financial Instrument and Exchange Act. And our regulatory approach is quite simple. The core idea is simple, technology neutrality and functional equivalence. If an activity performs the same economic function and possess similar risks, it should face comparable rules, regardless of whether it is enabled by distributed ledger or traditional infrastructures. A function-based lens helps firms choose the right license and control from the outset. Tokens with security-like features are addressed under securities rules, while stablecoins follow payment service standards. This reduces legal uncertainty and shortens the path to compliant time to market. In 2025, many Japanese financial institutions, including banks, have made announcements on the use of blockchain, such as issuing stablecoins. This may be because of the legal clarity and created an environment in which large enterprises can easily participate. Thank you.
Perfect. Thank you very much for laying that out in a very comprehensive way, Masashi. So Fumiaki, I'm going to turn to you. And so Masashi's laid out some of the sort of regulatory environment and how the JFSA is looking to view tokens, particularly security tokens, and how that space is evolving. But from a legal practitioner's perspective, what are you looking at? What are the critical legal distinctions that businesses are looking at to operate in Japan under this framework? And what are sort of the key hurdles that you see clients struggling with when they're entering the market?
Well, thank you so much, Jackson. So, as a lawyer working in Japan, so I like to share two important points that I often explain to international clients. The first, when a foreign company wants to do business with digital asset in Japan, it's important to know Japan does not have one single law for all types of crypto asset. Instead, the legal rules are depending on the type of asset. So, for example, if the asset is a virtual currency like Bitcoin, the business must follow the Payment Services Act. If the asset is a security token, as Masashi-san said, the Financial Instrument Exchange Act applies. So because of this, so it's very important to check how your asset is classified under Japanese law. So before you start your business, so I recommend you speaking with legal experts earlier in the process. Also, so in Japan, so most digital businesses are supervised by the JFSA. So it's a good idea to contact the JFSA early to confirm your business model and get their feedback. And then, so that's the second question, your second question about compliance challenges. Um, I think so. One common issue is related to the JFS's expectation for the three lines of defense compliance system. Yeah, this means the company must have three layers of control. The first line is a business team. The second line is a compliance team, and the third line is internal audit. So many global companies, rely on their headquarters for the second line on compliance. In other words, so they use compliance staff who are based overseas. But the JFSA want to see the compliance function works properly inside the Japan office. So yeah, they want to make sure the Japan entity has enough people and systems to manage risks and follow the rules. If there is a gap in understanding between the company and the JFSA, the legislation processes can be delayed. So I believe it's very important to have strong second line compliance staff in Japan. So this helps build trust with the regulator and makes the licensing processes smoother. Okay, so that's for my answer. Yeah.
Perfect. Thank you. So where we want to move to next is the future, and how Japan is positioning in a global context. So despite many jurisdictions around the world moving at an incredible pace, Japan seems to still be a leader in digital assets. I was in WebEx just a few weeks ago. There were many international and Japanese businesses who are very excited about what they've built and what they're building in the space. So I want to turn to both of you now to look at what's coming next and how Japan is positioning for that. So starting with you, Masashi, many global jurisdictions are starting to grapple with how to regulate new areas like stablecoins. And you've already mentioned, I guess, security tokens, but I guess going back to sort of the payment token side, in addition to stablecoins, there was a lot of conversation about tokenization and about staking as well. So what is the JFSA's current position on these technologies, and how do you think that this is going to play out into the future?
Okay. So we already established a clear legal framework for stablecoins under the 2023 amendment in the Payment Services Act. And in addition to the point mentioned before, the regulations have also been clarified for handling foreign issued stablecoins. So unlike the MiCA framework, Japan does not require the issuer of a foreign stablecoin to establish a legal entity in Japan for it to be listed on a domestic exchange. However, additional obligations are imposed on Japanese exchanges when handling such foreign issue stablecoins, such as the obligation that electronic payment instrument service provider have to handle the stablecoin whose registration in the country where the issuer is located is equivalent to the registration in Japan. In addition, discussions around staking have progressed, and it is now possible to offer staking service under certain conditions. So FSA is basically FSA is exploring various possibilities. Our approach to regulation is technology neutral, as I mentioned, meaning we do not regulate something simply because it is labeled as something. Instead, whether a service requires registration depends on the specific activities it provides. Furthermore, as a fundamental regulatory stance, we consider centralized points that could be vulnerable to hacker attacks as areas that require protection. We also keeping a close eye on how other authorities are approaching new technologies. We are also studying regulations in other regions, not only US or EU, but also other regions like Asia, Australia, Singapore, and so on. And we are talking with many authorities about the new technology. In fact, I was in South Korea earlier this week on a business trip to meet with Asian authorities. And furthermore, we're not just talking with the authorities, we're talking with many players in the market to learn more about technologies. Last year, we went to DevCon in Bangkok to learn the technology from the developers, and we continue to engage in dialogue with market participants to ensure that the regulations we create are market-based. And if you have any questions or concerns about Japan's regulatory framework, please visit Financial Services Agency's website. There's a page called Fintech Support Desk where you can communicate with us online or via email. And if you want to meet us offline, we held a week called Japan Fintech Week in the end of the February to the beginning of March. You can meet not just us, but many Japanese financial business operators in this week. We have a website for it, so please visit our website. Actually, I met Jack there, and so like Jack, and we met Amy Rose too. So if you want to meet us, please come to this week. It will be nice. It'll be cold, but we are very warm for it for you guys. So please come to this week. Thank you.
Thank you. Yeah, it's interesting that you mentioned that the hacker vulnerability. I'm in Seoul in South Korea at the moment, Masashi, and as you mentioned, that's a very, very hot topic at the moment. So as a financial services regulator, it shows that you're very thorough, that you're considering that risk within this space as well. But thank you very much for the clarity and for the offer for listeners to come along to Japan FinTech Week in February to March. And I think that the JFSA is usually hard to miss wearing the white hoodies. So I suspect you'll have a lot of Australians looking for you there. Now, Fumiaki, I wanted to move to you. So these regulatory developments, how do you think that they're going to affect foreign businesses looking to work in Japan? I also, those few weeks ago at WebEx, heard some whispers about a potential tax change incoming and how that may affect the space. But to finish up, we want to hear from you. Yeah, what should Australian businesses be considering who are looking to enter Japan?
Thanks so much, Jackson. Yeah, as Masashi-san said, so the upcoming regulatory change in Japan also will have a big impact on foreign investment and business activity. The regulation of crypto asset is expected to shift from the Payment Service Act to the Financial Instruments and Exchange Act. So yeah, this is because the crypto not so much payment mediums as an alternative investment. So yeah, this means the legal requirement for businesses so dealing with crypto assets will change significantly. So yeah, companies may need to meet stricter standards, yeah, similar to those for securities businesses. So and regarding tax, yeah, so there are discussions about the change to the retail tax system in the past. So profit from crypto trading were taxed and a comprehensive income tax system, yeah, which could result in higher tax rates. But with the legal shift to the Financial Instruments Act, so there is a possibility. So crypto profits will be taxed separately. Yeah, I mean, so with a lower and more favorable rate. So if this happens, it could encourage more foreign investors and businesses to enter the Japanese market. So um, what advice I would give to an Australian professional services firm? I think so. My suggestion is to wait until the new legal and tax rules are finalized before starting operation in Japan. So the reason is if you start your business under the current rules, you may need to adjust your structured operations, yeah, later to meet the new requirements. So yeah, I recommend, so that's why I recommend so speaking with Japanese legal tax experts now, because they can help you understand the expected timeline for the changes and what kind of resources you will need to comply with the new rules. Yeah, for example, you may need to build a stronger compliance team or change your business model. Yeah, so preparing it earlier so will help you move quickly and smoothly when the new regulation take effect. Okay. Yeah, thanks so much.
Perfect. Thank you so much both. So Really appreciate the clarity that you've both shared this morning to the listeners who are looking to do business in Japan. So I think in summary, there's a Financial Instruments Act that is going to have several changes in the impact, particularly tokens that may be considered securities or similar, but also a potential tax change coming along with that. Fumiaki, you mentioned that businesses should seek professional advice to understand the expected timeline and how it may impact their business model specifically. And Masashi, you were very clear on several points, but also mentioned a willingness for businesses to approach you and the JFSA to speak directly on what it is they're looking to do now and in the future. So thank you both. I really enjoyed this session, and Alec, I'll hand back over to you to continue the conversation.
Thank you to our Japanese speakers.